Welcome to the Personal Finance Club show. Today we are roasting the portfolio of a 26-year-old mom.
Roast my portfolio.
All right, up on the chopping block today is Danica. She's 26 years old. There's her Instagram. She makes $59,000 a year. Her annual investments are between $6,000 and $12,000. That gives her an investment rate of between 10 and 20% per year. Pretty good. Here's her portfolio. She's got 4 major investments. First, VFIX, which is the Vanguard 500 index fund, which is like the S&P 500. Second, she has VTSAX, which is the Vanguard Total Stock Market Index Fund. You can see that makes up the lion's share of her portfolio. Then she's got some crypto, $3,000, and then she's got some random stocks in Robinhood for $2,000, totaling $33,000. Pretty amazing start for 26 years old. Now let's look at those top 2 investments. One is the Vanguard 500, which is about the 500 biggest stocks in the US. And the other is the Vanguard Total Stock Market Index Fund, which is the total, like all the stocks in the US, which is about 4,000 stocks. It turns out those 2 funds will perform nearly identically. In fact, here's a look at the 12 most popular US stock market index funds. Some of these track 500 stocks, some track 4,000, some are ETFs, some are index funds, and you can see they're virtually identical. And so when you buy 2 of these, you're not really doing anything. You're not really getting more diversification. You're not really getting different behavior. You're just kind of buying the same thing in different packages, and it's going to add complexity to your portfolio for no reason. That said, it's not bad. It's just not really doing anything. Here's her asset allocation. It's about 91% US stocks and about 9% crypto. There's no international stocks and there's no bonds. That is where we could get some diversification by adding in those asset classes to help protect in case maybe the US isn't the economic superpower the next 100 years that it has been the last 100 years. This is a breakdown of her index funds versus what I would call her YOLO funds. And so between the crypto and the individual stocks, it makes up about 15% of her portfolio. I like to keep those YOLO investments under 10% so that if they go to zero, you're not ruined, and the 90% of your portfolio can still grow, but there's enough to have some fun, get rid of that FOMO, and it's your lottery ticket in case crypto or those individual stocks go to the moon. All right, what are the pros and cons of her portfolio? First, she's got a solid savings rate. 10 to 20% is fantastic. 10's a little bit lower. I'd like to get that 20% or higher, but that's great. She's mostly in an index fund. 80% of her portfolio is in index funds, which is fantastic. And it's a very low net expense ratio. She's not paying for an expensive financial advisor or high expense ratio actively managed funds. The cons, it's a little high in the YOLO investments. I'd like to keep that under 10%. She's duplicating US funds, so she's got those 2 funds that could just be one. And I would consider adding an international or bond fund to actually add some diversification to the portfolio. Overall, what's the grade? Danica, I think you're doing an excellent job. Keep that savings rate high. Add a little bit of diversification. I give you a B+. Way to go. Boom. You just got roasted.
Roast my portfolio.